Live.
Hello everybody and welcome to OEG's latest webinar from wherever you're listening today. We're going to talk today about tariffs and tourism and whether they pose a challenge or an opportunity to the industry, so plenty of ground to cover there. I'm delighted today to be joined by two speakers and as ever John Grant, OEG's Chief Analyst. Lineup today of our speakers, we're delighted to be joined by Oliver Martin, who's a Senior Director at Skift. Oliver is a globally recognised leader in tourism development and is hopefully going to share his insights on developments and his general take on what's happening in the tourism sector in light of all of the things that are happening right now. No pressure, Oliver, and welcome. Thanks for joining us today. We also have Jacob Puett-Yancey joining us today. Jacob is Head of Analytics at Arrivalist, very newly in post. Arrivalist are a pioneer in travel analytics and media measurement for tourism destinations. And until very recently, Jacob led the research team at Visit Florida for over 7 years. So we're also hoping to tap into your experience of that incredible tourism market and share your thoughts with us today. So welcome, Jacob.
Pleasure to be here, Deirdre.
Okay, perfect. Right, so let's come back to the slide deck for a moment. So today we are going to take a look at tourism trends. What impact, if any, might all of the geopolitical events that are happening, there's too many to talk about, but we had to acknowledge what's happening in the world. And in particular, what impact might tariffs be having on tourism? We're kind of also interested in, are tourism patterns changing? There's been a lot of turmoil in the travel industry, it's fair to say, I think, over the last 5 years or so. So really interested to just have a bit of a discussion about what we're seeing and perhaps to just talk about maybe some of those norms that we've sort of all accepted in the tourism industry. Are they changing? Do things look different? And then what does the future hold? So there are a whole series of ambitious end of decade tourism targets that are being announced. So we'll come to that and have a bit of discussion about that as we go. So if you have questions, please drop them into the chat and we'll do our best to deal with those as we go. And yeah, let's dive in. For those of you who join us regularly, you'll know that we always start with a look at capacity at a global level. And this has been tracking pretty steadily for the summer season so far. What we're seeing here is the global capacity picture over the months of the year. And we're going back here to 2019, the black line, last year, 2024, the grey line, and yellow, current year, up until this month, June, and then the rest of the summer season. And then John's favourite line that every time I try and remove it, he keeps telling me to add it back in. This green dotted line is if capacity had continued to grow at the rate that it was growing at pre-pandemic between 2015 and 2019. This is where our capacity level would have been. So it's always a little bit of a salutary reminder about the reset that happened in capacity terms, certainly. But in terms of trend over last year, we're tracking pretty much consistently, aren't we, John, this year?
There's it's a pretty steady pattern, and I guess we can't be surprised by that, particularly as we're in the last throes of June. So we're going to be halfway through the year. We've got July and August, some of the peak months coming up for demand and capacity. So it's pretty good from that perspective. I think, there's no doubt that the industry has seen some pretty tough challenges in the last month or so. But I think the prognosis to the year end is still good. When you think about it, average fares are down slightly, particularly in some markets where there's a bit of a slowdown in the economy, and the US domestic market seems to be perhaps impacted more than other markets by that event. And at the same time, we're fortunate because the price of oil, despite the spike we saw over the weekend, is down considerably against last year. That flows through to the airlines, of course, and that makes their operating costs cheaper. We've also got the weakness of, or the relative weakness of the US dollar this year versus last year, and in some currencies that can be up to a 10% strengthening in the local currency. So the prognosis for the airlines to the year end is actually pretty good. IATA's downgraded their net profit margin slightly after their AGM. Maybe it's because they spent too much money on the AGM. I don't know, but it's it's not a bad position to be in for the industry. There will always be those airlines that are on the margin and are struggling. I've just done a piece on JetBlue that's going out and some of the difficulties they face, stuck in a hybrid type position in the market, which is always a dangerous place to be. But I think for most regional markets, the picture looks quite good this year. Certainly growth in Europe, particularly to Spain, as we'll see later. It's a pretty strong market despite all of the events that we've gone through in the last 6 weeks.
John, it's not like you to be upbeat and optimistic.
Deirdre, it's summer. Make the most.
I'm filing that. I thought, well, it might be somewhere where you are.
Summer here.
I had a moment to take stock today when I saw a headline earlier that said 6 months from now will be Christmas Day for those of you who celebrate it. So yeah, that was a gloomy thought as we've just gone past the longest day of the year here in this part of the world. Anyway, talking then a bit about some of those markets, we've just pulled out for this peak summer months, June to August 24 versus June to August 25. That's what we're showing on the slide deck here. The top 20 country pairs in capacity terms. So you can sort of see, as John was saying, there's some markets where there's strong growth continuing. The largest one is certainly in the summer months, Spain to UK. That's probably more reflective of the UK weather, although there has been a heat wave, but it never hangs around very long. And there are some that are not surprises here. So Canada, USA, still impacted from what's been happening there. And there are some other sort of interesting movements, strong growth China, Japan. So we're still seeing a bit of market recovery really in Asia, aren't we?
Yeah,
although not in the case of China, Thailand.
Yeah,
where,
exactly. I find
there's a real shift, isn't there?
China, Thailand is really interesting, and maybe we'll look at that in more detail in the coming months. But clearly, the great hope that the Thai Tourism Board had about the recovery and return of a Chinese traveller has not emerged, and the airlines are cutting back capacity quite significantly year on year to reflect that, which is strange, because when you look at some of the other Chinese markets, you look at China, Japan, it's almost like a direct swap out of, do you want to go to Bangkok for the weekend or shall I go to Tokyo and buy something? Maybe it's the fact that the Japanese yen has devalued considerably as well that suddenly makes it a more attractive destination for the Chinese traveller, slightly shorter distances as well. So there's some interesting churn in popularity and capacity from the airlines to some of these markets. Spain, United Kingdom is such a huge market, and it will always grow. Plenty of low-cost airlines finding new opportunities and new destinations. And it's, despite all of the stories about over-tourism, I was in Mallorca 2 weeks ago, and it's full of Brits and everyone was having a great time. And people were friendly. no protest. It was a nice place to be. Why would you not go there?
Interested in Oliver's take on that, though, because I think those protests are there, aren't they? And they're very real in certain parts of Europe. Certainly, we're seeing much more noise, aren't we, about the impact that tourism potentially is having, and of course, for destinations that have these, and we're going to come to this at the end, the ambitious tourism targets, managing growth in a sustainable way is really essential, isn't it?
Deirdre, I'm going to indirectly answer that question by looking at the previous numbers you showed for China and Thailand.
Yeah,
I think the reason for all of this is there's other destinations on offer now for the Chinese market. You've got Philippines, you've got Malaysia, you've got Sri Lanka, which is booming with the Chinese visitors. So I think, there's probably a twofold story in here with what's happening in China and Thailand. Is destinations that get complacent on feeder markets or source markets and just treat them as static markets will lose in the long run. And I think this is what happened with Thailand. I think they relied very heavily on the Chinese market and weren't quick to realize that the market changed post-COVID. And as a result, other destinations became either more cooler or were looking at how they could target the Chinese traveler. And that's what's happened. Thailand's decline has been the benefit of Sri Lanka and Philippines and Malaysia. Now, with John's point is, I'm in Europe as well, and Berlin is a tourism hub, and there's just insane amount of tourism that's been happening, and the weather's nice, and people are traveling. I think the whole notion of sustainability in our industry is a very much a loaded concept. We talk a big game, but I think destinations, airlines, hotel groups, we haven't necessarily weaned ourselves off the concept of more. This industry does more because it wants to do more, and not necessarily because it wants to do better from a sustainability perspective. And I think we still need to clearly address those kind of issues.
So it's still a numbers game, isn't it?
We're a revenue
game.
We're so a numbers game. I mean, Jacob recently coming to Arrivalist from a destination, but I'm curious to see what Jacob thinks. But we are definitely a numbers game still.
Yeah, absolutely. I mean, there is certainly a tremendous amount of pressure on destinations from their stakeholders where they get their funding, et cetera, for numbers to continue to go up. Now, that's certainly not the case in every single destination, as is evidenced by the fact that there are some destinations where you see those protests happening. But even in destinations like that, there are probably some stakeholders where the pressure is still on to keep the numbers up. But yes, absolutely a numbers game. The sustainability issue is also an interesting one. Every time I've gone to a conference in the industry, for example, where sustainability gets talked about, the definition of what sustainability means in the mind of a traveler is a little different. It's a little nebulous. And I've never really seen a ton of evidence that people are making real, meaningful decisions to spend money in a different way based on sustainability metrics. So,
well, it's interesting. Deirdre and I were at a conference a couple of years ago, and there was one of the senior managers from one of the major airlines talking about sustainability and the relationship between sustainability and passenger bookings. And he was saying they'd created an option where you could actually make an offset in your booking for a contribution towards sustainability, because investors, everyone felt that was the right thing to do. He said very few passengers at that point in the booking made a contribution, and it was a hollow type sort of sentiment that we sometimes profess. We want to talk about sustainability, behave responsibly, and all of these sort of things. And can I just say, while I remember, Deirdre, I'm disappointed I did not get an invite to Jeff Bezos's wedding in Venice this weekend. So
I'll give you mine, John. I'm not going to be going.
You're not going on.
There'll be too many people there. It'll be too busy.
Exactly.
I think it's an interesting proposition, isn't it? And I do, because there's this sense that when people are traveling, there's a sort of wish list of when you go to a new destination, whether it's Venice or Japan or wherever, there's a list of places to go and things to see, and those things don't always change, do they? And in fact, actually, with the development of AI tools like ChatGPT, it's never been easier to plug in give me an itinerary for 2 weeks to wherever, Tokyo or Venice or whatever. And so there's a risk, isn't there, to some extent, that then everybody already wants to go to the best restaurant and the nice little shopping market or whatever it is, or the coolest bar. But actually, there's a risk that those things become even more accessible because there's much more visibility about journeys that other people have made and all the rest of it. Now, we could have a whole separate conversation about AI and the algorithm and how all of that works.
Let's recognise that for an airline, even the best airlines, profit margins are not that wonderful. The best are doing 14, 15% at the top of an economic cycle with strong demand. Many are not even making a profit. And therefore, to continually change their network or invest in new destinations or move capacity around is a huge cost in terms of marketing, activity, resources, etc., etc. And so for an airline like EasyJet, adding another slot in Palma makes a lot more sense than adding a new destination somewhere else. And at some point, an airline looks at that and thinks, if I don't take that last slot at that particular airport, someone else is going to take it, and I'm going to lose out. So it's a very competitive type market.
John and Deidre, this is then the imperative for DMOs and their partners, and a bit of a responsibility, and then also the opportunity for all the other players in this industry, tourism, business, leisure, and across the board. The imperative is we need to get better at dispersing people within destinations. We're an industry that, again, and without sounding rude, we're lazy because we have traditionally promoted the same attractions, the same destinations, the same packages, the same itineraries, because we know that it can make our industry money. And if we are willing to think beyond that and maybe do a little of investment, and really this is the duty of DMOs and their partners, and usually with governments, to think about these sub-tier destinations. So these like subnational destinations, these tier 2, tier 3 destinations. If there's some level of investment in this, it lowers the risk for airlines. And if we can work with them for the first couple of years to make these routes profitable, then eventually the market will shift and we'll start getting people going to these tier 2, tier 3 destinations. And so it's addressing sustainability, which will eventually help these destinations in the medium longer term. But we need to do this as destinations, and we need to do this as tourism players. Airlines,
I think to some extent that's made easier, isn't it, when you're playing in a new market, in terms of when you're trying to tap into tempting the outbound Indian traveler who hasn't ever been outside of India before, or hasn't been to a particular destination before, or even the Chinese outbound traveler. Then I think that's an easier play, because you're then creating a new market rather than following those kind of old patterns of how things were previously, theoretically anyway.
And also works with destinations as well that are relatively nascent or new. Like, you take some of these Saudi-based destinations where the awareness is really low, we're creating a whole new market for that area. It becomes very tough when you've got a very established destination like Britain, for instance, where we all want to go to London. We don't necessarily want to go to other smaller tier 2, tier 3 destinations within Britain, mostly because we don't know about them.
Edinburgh, come to Edinburgh. It's great.
Oh,
no, actually,
sure
it's really busy.
It's
really busy.
It's funny you should say that.
Sorry, go ahead.
Edinburgh was quoted as the most expensive destination in the United Kingdom this morning. Anyway, sorry, Jacob.
Yeah, I was just going to say the other challenge that you run into with an exercise like that, Florida has been trying to go down this path, for a lot of these reasons recently. We just have been doing. I'm sorry, I say we. This is a very new thing for me not to be at Visit
Yeah,
Florida. Today is my 2-week anniversary of no longer being at Visit Florida. So,
Congratulations.
Visit Florida has done a lot of research recently as part of a brand refresh that they're going to be launching here within the next couple of months. And this idea of, dispersing people to new parts of the state that they haven't been to is a big part of what they're going to be trying to accomplish with that. And one of the things that was discovered as part of that research is that when you show people a part of the state that they're maybe a little bit less familiar with, it's not even just that, well, what I want is to go to this part of the state like Miami or Orlando or whatever part of the state that they're familiar with because that's what they know and want to do. Sometimes you also run into this thing where I don't even believe that this thing that you're showing me is Florida because this brand image of what the destination is so strongly ingrained in their brain that if you show them something that's a little bit different in an attempt to try to educate them or tempt them to go to some other part of the destination, even if it contrasts just a little bit with what they think of that destination as being, sometimes they can be like, I don't even think that's what that place is. And that's another challenge that you can run into sometimes.
Really interesting, isn't it? So yeah, you've got a whole perception, and we know changing perceptions is really, really, really difficult, isn't it? It's particularly if they're sort of associated with a particular perspective. Can we come back to the slide deck for a minute? Because I'm conscious we could probably all talk all day about this. We wanted to share with you, not least because we headlined on tourism and tariffs, we wanted to share with you some latest stats from the US visitor statistics. So they were just published at the end of last week. They are preliminary, so still, I guess, subject to a little change, but Jacob will know what sort of sensitivity there is really on that. And what this is showing is for international arrivals for May 25 and then for the year to date. For each metric here, it's the top 20 international countries ranked by volumes. You can see the UK is the biggest. And then this is the percentage change from 2024. So there's a bit of a mixed story here. But we think, clearly many people traveling from the UK to the US are traveling for tourism. And these are not spur of the moment trips. So this is pre-booked travel potentially that's booked, 6 months ago, 12 months ago even. To travel to Florida and other parts of the US in peak, peak summer holiday times. So my sense is that we're not going to see a big variation really in the UK numbers probably through the rest of the summer and maybe even through to October.
If you look at forward bookings and you look at how strong airlines load factors have been in the last couple of months from the UK to the US, there is very little spare capacity as we go into the holiday season. And similarly, I think, as you say, Deirdre, that's going to hold all the way through to the end of October and the whole summer program. I think the more interesting thing will be the nuances like, what does the Canada market look like for January, February, March in Florida? And perhaps more importantly, what does the Caribbean market look like from Canada in those months to see if there is any destination switching taking place as resistance from the snowbird market continues to linger. I don't know. We'll only find out in time. South Korea is quite interesting. That's down quite by 11%. Apparent reason why that would be the case.
Germany, though. Germany's almost
Germany's a busted market at the moment. I mean, it's a pretty market, full stop, for international travellers. We know, having seen that in the past couple of webinars, we've touched on that. The Netherlands is down as well. Ecuador, I guess maybe that is the fear of you're going to get deported or you're going to get interrogated. Those sort of irrational or semi-rational fears are certainly out there in some marketplaces.
Deidre and John.
Jacob, yeah.
Sorry, go ahead. Go ahead, Deidre.
No, I was just going to ask Jacob what your sort of initial reaction was when you saw these numbers, because obviously these are numbers that you'll have been used to looking at a lot.
Sure. Before I get to that, I'll just address your earlier comment about these numbers being preliminary, and then also answer Bernard's question from chat. The difference between these preliminary numbers and the numbers that will get published probably in 2 to 4 weeks, that will be the final numbers, is the fact that the Canada numbers are missing, and the fact that Mexico land numbers are missing. I can't remember if in the slide that was just showing the Mexico air numbers are in there. I don't think that in this particular table the Mexico air numbers are there, though the Mexico air numbers have been published. So that's what makes them preliminary, is those numbers. So you can be on the lookout if you want to check those come from the U.S. National Travel and Tourism Office, Bernard. So if you want to check back to their website in somewhere between 2 and 4 weeks, you can see what the May Canada numbers are going to end up looking like. As Deidre mentioned, those are numbers that, in my time at Visit Florida, I would check up on quite frequently, and I especially started awaiting them each month with bated breath over the last few months, for reasons that I think are probably pretty obvious to everyone that is on this call. And every month over the course of 2025 that these numbers would come out, the numbers would come out, and then I would find some reason to think, okay, well, they didn't really shed very much light on what I think the long-term situation is this time, but next month are the time when I think, okay, now I'll finally have a grasp on what I think the long-term picture is going to be as a result of everything that's going on in the world. And that's what happened when the February numbers came out, and that's what happened when the March numbers came out, and that's what happened when the April numbers came out, and now finally that the May numbers have come out, it kind of happened again. I found those numbers to be a little bit boring, frankly, and still don't really help me get a good grasp, I think, of what's going on. And I think part of that is a little bit what Deidre's talking about, particularly for the European markets. So many travelers make their bookings really far in advance, and I think a lot of those bookings were probably made well before any of the current situations that might impact travel decisions started to develop. That's a little bit less so the case for a lot of the Latin American origin markets in terms of travel to the US. Though interestingly, even for those Latin American origin markets that have shorter booking windows, at least for travel to Florida, and I think for travel to the US as a whole, a lot of those Latin American origin markets are doing pretty well. The Mexico numbers weren't on that table, but I know that Mexican travel, at least Mexican air travel to Florida, even through May, is doing pretty darn well so far this year. Despite everything that's going on. So that's certainly an interesting story to watch. Sorry, go ahead, John.
Yeah, I was just going to say the Mexican market has been flooded with low-cost Mexican airlines who've suddenly got lots of capacity back as they've overcome their MRO and Pratt & Whitney engine issue. So, it's pretty cheap to get from Mexico to the US at the moment compared to previous years.
To John's point earlier, I do think that once we start to get into the latter half of the year, especially into wintertime, that's when it's going to be really, really crucial to see what's going on with Canadian visitation to Florida and other parts of the US. I've seen some news reports that a lot of Canadian snowbirds have been trying to list their homes in Florida for sale. It's a really interesting real estate market in Florida at the moment. So, I don't know how successful they will be at trying to sell those homes. That's something that remains to be seen. So a lot of sort of different factors all happening at the same time in Florida right now. So we'll just have to kind of wait and see what's happening.
It's interesting. Yeah, it's interesting though, Jacob, isn't it? Because you've got the both on the property, the real estate side, and the tourism side. You've got a resilient, massive domestic market in the rest of the US that will always continue to want to come to the Sunshine State, and that's that's the reality, isn't it? That there's always insulation. We saw it in China too when no one could travel outside of China, and destinations like Hainan Island and the other resort destinations benefit because there will always be popularity in what is familiar, and you can holiday at home with you might have to take a flight, but all of the things and all that's kind of comfortable and etc. is all there, and maybe that's behind what we're seeing in some of these country markets where the numbers are starting to fall, and that that sort of sentiment is only gonna pan out, isn't it, as the years go on. I wanted to just show, and Oliver, please, if you haven't, if we haven't gone past that yet, please chime in.
Sure.
And I'll load up the next slide. And
sure. So, Deidre and Jacob, there's I think a few things at play. The number one correlating factor for if people will travel is their perception of the economy. If they have money in their pocket, they'll travel. If they don't have money in their pocket and they're negative on the economy, they won't travel. And I think there's still some level of more positive sentiment of the economy, despite a lot of rhetoric around the tariffs. So I think that's kind of carrying through in all of this. Perceptions, however, are down. Perceptions move relatively fast, right? Someone says something bad and you have a negative perception. It's the behavior that's trailing in all of this. And I think that's what you're saying. It's like people had already pre-planned trips to the US. They're sticking with the trip. Let's see what happens with the Q3 and Q4 numbers. And I think that's where the story is going to be. Across the board, perceptions are negative on what's happening in the US. We don't like what's happening at the border. We don't like what's been happening to, at the geopolitical level. We don't like what's happening at the domestic political level, at least from an international perspective. This will play out on how people choose to travel and where they choose to travel to. So let's see what's going to happen in the long run. Bernard, I know a lot of this stuff is behind a paywall. We like subscribers. We do have a lot of stuff in the public domain, though. You just have to dig around on our site.
Bernard won't pay. Bernard won't pay.
Yeah, Bernard won't pay. But there is because we're tracking this on a weekly basis on how these things are playing out. We actually have something that's coming out in the next 2 weeks on American perceptions of travel to Canada and their behavior. And, I'll flip this around to Deidre and John, and maybe we can get this to all of you that are joining us today.
Yeah, interesting. So just some of that anticipatory, I guess, thing then around what's coming in Q3 and Q4. We've got a collation of different bits of information here. Our friends over at Visual Approach, so Courtney Miller and his team have put together, this was a couple of weeks ago now, this is just tracking Canadian travel versus to the US versus non-US. So you can see there's a little bit of a disparity happening there, not unexpectedly. That was the point you were making earlier, John. There was quite an alarming report from the World Travel and Tourism Council, I think I've got that the right way around, that the US economy potentially might face a hit of $12.5 billion in lost tourism revenues. That feels a little bit overstated to me, but it's a big headline that was kind of put out there. We've seen organizations like Tourism Economics, a European-based consultancy and provider of data and insights, lowering their forecast for inbound US travel this year. and what they're showing here is where they were of December 24, where they are now of April 25. So up to 10% potential reduction. And then, and apologies, the resolution on this one isn't great. We'll try and sort that out for when we send the deck over later. This was a piece of Skift survey work done on sentiment, Oliver. So this was Canada, Germany, and the UK all showing sharpest drops in travel intent to the US, and that's where we are, isn't it? That's the reality now, that people are, as we move through the summer, the peak summer, and people take those holidays that they planned last year. Personally, I like to have the next holiday planned before I come back from the one that's coming. So we're going to see travel planning happening in earnest, aren't we, in late August, September, October?
What we shouldn't underestimate, though, and this happens quite frequently. Two things. One, travel tourism, the aviation sector, the whole industry lurches from one crisis to another, and it bounces back. And the market and the average consumer, unfortunately, has a pretty short memory of what happened in the past and will return pretty quickly. The second thing is, in very big markets like the US, as we saw during the pandemic, it's very, markets switch very quickly. So suddenly the international traveler to Florida may not be there. The US domestic market can be activated and brought back in. And we've, that will happen, I'm sure. And Jacob's probably seen that happen in the past, as I say, during the pandemic. A lot more people driving down to Florida and other destinations. So I think these are all, it's not like a tsunami of, negative actions. It's small little ripples in the market that take place every day and every month in the airline industry.
John and Deidre, there's a question here from Eva. Sorry, I'm pronouncing your name wrong. Africa's hot, and we're seeing this with our perception-based data. That there's obviously been traditional.
Morocco is way off the scale.
Exactly, Morocco's off the scale. There's very established tourism destinations in Africa. You've got the safari product, you've got Morocco, but we're starting to see a growth in destinations that would traditionally not be, your prime tier 1 destinations, and it's because with better air connectivity, the emergence of these destinations, which can effectively market to a traveler through social media at a much lower price point, that we are starting to see an increase in perceptions of people having higher travel intentions and wanting to travel to these African destinations. Rwanda, Namibia, Mozambique, and then places in East Africa are starting to be a lot more popular with travelers. They're appearing in their top 10 wish lists. It's now up to these DMOs to start converting these factors.
And 10 years ago, who would have predicted that two of the US largest legacy airlines would operate direct flights to Marrakesh?
Yeah. And Marrakesh, I've got a slide later. It's actually in the top 10 TripAdvisor wish list destinations, number 8, I think, this year. So along with a bunch of other global destinations. Just kind of, I want to come back to this because it's really relevant to what we're going to talk about in terms of those big vision tourism targets. But you made the point, John, there are bumps in the road, and there are absolutely bumps in the road. This week has really brought that to the fore for the industry. I think what's quite interesting is obviously, we've talked at length on this webinar about the supply chain issues that have impacted the industry. We've all sort of spent the past, few months trying to work out what tariffs might mean, or what tariffs might be in place tomorrow versus what were in place last week. But there's a whole number of geopolitical events that are happening that continue to have significant impact on the industry. And in the last couple of months, we've sort of seen those escalating. I think what's really interesting is the extent to which, and I know we're sort of saying, you know, markets like the US are resilient. There's a big domestic market which shores up the volume and the numbers. But when you start to see things happening like we saw just on Monday this week, where, you know, airspace was shut down. So this is a flight radar picture from 1:45 UTC on the 22nd. We had Qatar shutting airspace. We had the UAE shutting airspace. And in particular, for the Middle East hubs, which have emerged in the last decade, really as these global connectors, this is a massive disruption to the start, but it also this will start to play, I think, into the sentiment about routings that people choose to take and parts of the world that people choose to travel to, perhaps in a way that, you know, for some markets maybe we haven't seen before, or not. I guess that's my question to the panel. You know, is this just a temporary, you know, issue, or are we going to see people starting to think twice about, you know, do I want to go to Dubai? Do I want to go to Riyadh? You know,
temporary issue.
What's the tourism impact going to be?
Temporary issue. You know, as I say, we will, as a market of consumers, we will forget about these events in 2 or 3 months' time maximum. Airlines have already got their bookings for the next 2 or 3 months in there. If they see any hint of a change in consumer perception, then pricing will address that issue for them very, very quickly. They'll sell Sixth Freedom traffic flows from Europe to Southeast Asia at discounted prices. They'll offer free hotel accommodation in Dubai, perhaps for 1 night if you buy 2 nights, etc. Whatever it happens to be. The DMOs and the airlines will respond to this really quickly and change it, you know, and that the airspace may stay closed for a little bit longer. And the Saudi authorities are getting a bit of practice about air traffic management before Riyadh Air starts flying. But apart from that, it's just a hiccup, Deirdre. I mean, you know, the industry's been going for 100 years. It's just 2 or 3 days, nothing more than that.
We do a lot of the brand health tracking for a number of the destinations within the region, and you know, consistently for the last decade, there's concerns that are mentioned. You know, safety and treatment of workers, safety and security, language barriers. We tended to call them concerns. You know, people have these latent kind of concerns in the back of their minds, but it's usually driven by a lack of, you know, proper understanding. They still book. And when they come to places like Dubai and Abu Dhabi and Ras Al Khaimah, they're pleasantly surprised. They're very happy with the experience. They go on their social media, they become brand ambassadors for the destinations, and then they choose to come back, or their friends and relatives come back. Yeah. So, and I think we've lived with this for the last decade. These kind of things that happen are annoyances at the time.
Absolutely.
And, you know, you might say something very negative on social media, but then you're still posting a picture of yourself at a great Syrian restaurant off of Sheikh Zayed Road, saying it's the best food you've ever had. And so I think you're completely right, John. This is a short-term occurrence, and the market will react either through pricing or through incentivization to ensure that the value is built in and people will continue their behavior.
Interested in the US take on this, and I'm putting this on you, Jacob, here. We've seen, so obviously we were talking about you know, significant what might be the impact be on inbound US travel. What we've seen in the last couple of years has been, and we talked about that in the context of Morocco, but we've also seen this right across Europe, huge surge of outbound US travelers because of partly the exchange rate's been really favorable. And I think there's also a bit of this kind of wrapped up in post-pandemic, not revenge spend, people just choosing to explore new places and go to, because why not? Because none of us could ever imagine a time when we couldn't go to all of those places, right? So travel patterns maybe have changed. Is this going to dampen the desire for the US outbound market to explore further into Europe and the Middle East from a security perspective? Or again, do you think it's just a bump in the road?
I would be surprised if it was a major impediment to outbound US travel. I think that generally, as a cultural factor, Americans feel relatively insulated from these kinds of world events, and think that it would be relatively unlikely that they would be themselves directly impacted by those kinds of things as part of travel. For example, I'm in Ireland right now, and while there's the things that are happening are not particularly close to me in Ireland. My mom called me last night because she was a little bit worried about the fact that maybe something would happen to me, but that thought literally hadn't crossed my mind that it would even be possible that anything could somehow impact me while traveling outside of the country. And I think that part of that is because I am American, and that's just kind of how Americans are. We in a way feel that we're invincible. So I'd be relatively surprised if those kind of events would dampen American exploration of the world. I think a bigger factor likely would be, some level of economic uncertainty in America, but even that I wouldn't necessarily say is a big deal. I've in my time at Visit Florida, that desire for Americans to spend more time going outside of the country was something that we watched closely because we viewed other countries as a big competitor for travel to Florida.
Yeah.
And we were worried that domestic visitation to Florida was going to start decreasing. And, so we were worried about that as a competitive factor. Fortunately for Florida, that didn't materialize, at least to a large enough extent that visitor numbers would decrease.
I think the biggest potential dampener to US outbound tourism is the strength of the US dollar.
It's the strength of the US dollar. That's exactly it.
If it moves significantly, well, one, I would be delighted for my own personal agenda. But there is a lot of frequent flyer redemption taking place from the US to Europe at the moment, and that may slow down a bit. I think it's all about currency and exchange rates.
Yeah,
not really, but a large part.
It's interesting though, isn't it? I was just thinking there about competition for markets, and when you think about the tourism product that's on offer in somewhere like Dubai and Abu Dhabi, and how that's, and delighted to hear that Disney's coming to Abu Dhabi. In the eyes of the Western European tourist, faced with questions and concerns about US immigration, actually, is it a viable alternative to say, well, I'll go the other way and I'll go to Dubai, go to Abu Dhabi, and try that out. And you start to see, the climate's an issue maybe in peak summer, but those shoulder seasons, Easter, October, you start to see more of a shift in people who maybe would have chosen Florida, and they're going to go. And as you say, Jacob, maybe not so much of an issue because you're always going to backfill that demand from elsewhere. But yeah, I wonder if we'll see that. I wonder if we'll.
We're calling this substitution tourism, that people are substituting trips, at least in the long-term planning, that they would have potentially gone to the US. They're thinking about alternative destinations. Canada and certain Canadian destinations are banking on this, that we're going to get an influx of Europeans or Asian travelers because of this. Let's see if this pans out for European and Asian-based destinations. That, look, at the end of the day, we might not like the US administration, but we still have a lot of respect and aspiration for a US trip. We like Americans, we like what's on offer. And America will still be this aspirational destination long after this government leaves office. Americans want to see New York, they want to see the Grand Canyon, they want to see their American relatives and their American friends. And we might not have these trips in the shorter term, especially if there's a lot more media articles that are coming out about border challenges and border issues, but we will still want to come to the US. And so I think there's probably a little bit of short-term pain that we're going to see, but I think in the medium longer term, I think there's still a very much a bright future for inbound tourism into the US. There was a question about what's happening with Brand USA, and especially with their budget decline. I think that's, I don't want to say anything about the US administration, but it's a very, I think it's just going to hurt America in the short term, but the industry will ultimately bounce back.
I think we're seeing, to maybe soften that point, Oliver, I think we're seeing, cuts to tourism promotion activity in lots of markets because of the economy. Not just the US. We're seeing it in Europe. We're seeing it in parts of Asia where the funds that previously were available for promotion, marketing activities are diverted elsewhere because local government, regional government are hurting because of the cost of all the stuff that's happened in the last 5 years.
And because of inflation and whatnot. And guess what? Yeah. With less dollars, you can still be very effective in the marketplace, either because of AI targeting or cheaper creative execution or digital channels, which cost a lot cheaper to target more effectively an audience or segment group that might be more aligned to what your offering is versus what we typically call a spray and pray campaign on television or mass billboards. I think our industry might be getting smarter.
You guys just need to keep on chatting. So far, I've got invites to go to Austin, Texas.
Yeah.
And if I don't get one from Ethiopian Airways holidays in the next 10 minutes, I'm going to be really.
Yeah, exactly.
Carry on talking.
A whole world of world
of anyone in Latin America, please come forward.
Okay, let's see if we can flush out Asia as well. I've got a couple of slides. I just want to, so I'm conscious of time. We've got about 8 to 10 minutes left. I just want to quickly show you a couple of slides on China's outbound market, and then we'll come back to the kind of more global visionary stuff. What we just wanted to take a quick look at was China's international capacity, and we've kind of acknowledged this in our discussion. Strong capacity growth. This is summer 25 versus 19 across Japan, Singapore, Malaysia, Vietnam. This is the point you were making earlier, Oliver, about there's been a redistribution of where Chinese travelers are going to. Obviously, significant reduction in China-US capacity. It's actually down 71%. That's for North America. So that's America and Canada grouped together for the purposes of just this slide. But strong capacity growth from China to Africa. Reasonably steady growth, Middle East, and then the other regions are pretty small.
When you look at this, Deirdre, and you look at the right-hand slide where it says China international capacity, that we need to make the point that is total international capacity, because the next slide shows how structurally that has changed year on year and over 2019, where Chinese airlines have backfilled nearly all of the capacity to Europe that was there in 2019, and European airlines, because no access to Russian airspace, extended journey times, etc., have left the market. And some of those numbers are stark. I mean, you look at the United Kingdom, nearly 90, is it 95% of the capacity is now provided by
96%.
It's provided by Chinese airlines between China and the United Kingdom. And in many markets, it's 100% because, maybe there isn't a Hungarian national airline. Same for Belgium in terms of Asian presence. But, these countries have reached a point where, to Oliver's point, Chinese travelers are flying to different destinations, and Chinese airlines are serving those growing market needs.
Well, I think what's quite interesting is and maybe this is just the LinkedIn algorithm for me, but I've seen in the past couple of months, quite a bit of promotion of China as a destination. And there's sort of targeted marketing taking place to re-engage, international travelers to come explore China. There's a whole sentiment there about, and this is the same, it's just the other way of looking at, when Chinese travelers travel to Europe or America or Australia, they like to travel on Chinese airlines. Europeans are pretty much the same. We like what we like, depending on what connectivity options we've got. So there's going to have to be, at some point, for the ambitions for the Chinese DMOs, there's going to have to be a shift, isn't there, in terms of pursuit of carriers and connectivity
But I don't think European airlines are really all that interested in China.
On the radar, is it?
Won't be for the next 5 or 10 years. Suddenly you've lost your slots at the major airports. You've got profitable long-haul networks elsewhere. Why would you abandon one of those destinations for a speculative punt at China? British Airways, just as one example, flew to Chengdu, and as soon as the money ran out and world routes had finished, they moved out of Chengdu as quickly as they possibly could. It is not a market for European airlines. And if you want to go there, you might as well embrace the culture as soon as you step on the airplane at Heathrow, or more likely Gatwick in the UK, because that's where the world is heading.
And last slide, look at the competition, right? So we can speculate about the source of these tourism targets. Everybody likes a target. Saudi kicked it off, didn't they, with their Vision 2030, really ambitious growth planned. We're now seeing a raft of other country markets coming out with ambitious pronouncements about how many people they want to attract by 2030. My kind of point is, so it makes it more competitive, in terms of everybody. Is everyone chasing the Indian outbound traveler? Is everyone chasing, the wealthy European traveler? Where's everybody going to be going? And really, if we looked at all of these aspirations, is the market growth going to be enough to service?
Not just the market growth, the aircraft supply and the resources and the manpower, the experience, etc., etc. If I started optimistically, when I look at these, I go Morocco possible, Egypt possible, Japan absolutely no chance because they don't have the airport capacity and they don't have the mindset to encourage international travel from near Asian markets. UAE, I think, unlikely to achieve it by 2031. South Africa, possible. Saudi Arabia, they're still smoking the same stuff they were smoking 5 years ago.
Deidre, I'm going to be a little bit more politically correct than John because five of these destinations are our clients. But I'll tell you right now,
none of them are my clients.
Okay. This is really, it's policy by bumper sticker. It looks good on a bumper sticker. It makes the tourism minister seem happy to cut the ribbon at WTM or ITB and say, we're going to have this many travelers by this date. It sounds good on paper, but the reality of it is these forecasts are usually done by consultants because they're getting paid to have these very inflated level numbers. When push comes to shove in the reality, the capacity on offer from airlines, hotels, tour operators The communities where these people need to go is just not there. I think the smarter thing that these destinations need to say is less numbers, but higher yield, a higher quality visitor dispersing within their destinations. And I think that's what we need to see.
Which is probably what Deirdre's got behind her on her right-hand side, higher quality.
Yeah, my dog just decided to make an appearance, but she's not barking, so hey, we're all good.
Excellent.
You know, and isn't there something to be said actually? And Jacob, you can probably relate to this. There's something to be said for a hard number, a target focuses the mind, doesn't it? In terms of if it's a means to garner support and bring stakeholders together under a shared goal, then you know maybe there's value in itself. But you know, then you got to manage the optics of not hitting the target, which one of our audience is making that point. So, you know, interesting. But you know.
Yeah, I mean, you absolutely do want to set goals for the very reasons that you just explained, but it's can be a big deal when that goal is not met, and if that goal is not met by a wide margin, as I suspect is going to be the case for some of those goals that you were just displaying, that can look very bad.
Yeah, but let's remember, in the world of politics, it's a 5-year cycle, and you're out of work after 4.5.
Yeah, exactly.
Yeah, exactly. I'm glad you've done the maths, Oliver. I was hoping that somebody would do the maths and tell me that it's you know, it's too ambitious.
Yeah, maybe the world's population is in fact, 25 billion people. So maybe this is all possible.
Well,
and you know what? The funny thing is, all those destinations you showed on the screen, they're all chasing the same traveler and the same market. So,
and I think that from our perspective is what is going to be really interesting to see play out in the rest of this decade and into the 2030s, that actually there's a lot of ambition, particularly in the Middle East. You saw that just from that slide, Saudi, the UAE, but then actually the destinations within the UAE, Doha, etc., etc. It's going to be interesting to watch how that plays out. And I guess from a traveler perspective, theoretically, then there's going to be plenty of choice, isn't there? About where to go. I'm afraid we're out of time. I feel like we could have probably carried on talking for significantly longer today, but we're going to have to wrap it up there. I think we've maybe just got a couple of minutes just for any final thoughts that our panel have on the topic, the subject, the state of play of things in the industry. No pressure. Jacob, what's your take on things?
Yeah, I mean, I'll say that the biggest lesson that I took away from my little over 7 years at Visit Florida is, we went through something like 14 hurricanes during that time, shootings, red tide, massive budget cut, all sorts of different political situations, and COVID, obviously. All of those things seemed absolutely huge at the time, and they had massive impacts on people's lives. But none of them have left long-lasting impacts on the state of the tourism industry. They have all passed, and this too shall pass. We will have new situations to deal with, and we will deal with those situations as they come. Tariffs will pass. All of the other things that are happening will pass, and we will deal with the new things as they come, and those will pass, and we'll deal with the new things after that.
Nice words. Thank you for that. Oliver?
Bullish on the market. Good things will happen in the tourism industry in the medium to long term. Shorter term, a little bit of pain.
I think you're spot on. Yeah, spot on. John?
Don't panic.
Keep calm.
And I say that as someone who's seen all of these events over decades in this industry. Oil crisis, 9/11, whatever it happens to be. The ultimate trajectory of travel tourism is always going to be in that 4 to 5% per annum growth mark. And it's how we manage it that's the most important part.
Yeah, for all of the reasons we've discussed. Well, panel, thank you so much for a really insightful, interesting discussion and conversation. And thanks to all our listeners for their thoughts and comments too. We will be back next month in about 4 weeks' time on the next one. But in the meantime, you can follow OEG's blog for insights on this and sort of other subjects, or please get in touch with the team if there's anything we shared today that you want to have any more information on. And just lastly, thanks very much for the discussion. It's been fun, and we'll see you on the next one.
Thank you.
Thanks, everyone.